squeeze me.
Good morning, everybody. Happy Thursday. It's April 24th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Bring this to you every Monday and Thursday morning, roughly around 8:30, 8:45, talking a little bit about the markets, what we saw, what we see now currently, and what we might be able to figure out going forward. So here we are, about 5 days left before the end of the month, before April is over. Of course, next Wednesday is April 30th, is the last trading day of the month. It's been a terrible month so far for markets, even though the last 2 days have been pretty strong for the S&P 500 and for the Nasdaq. Not so much great for the industrials, but they're starting to improve a little bit here. Let's take a look at the numbers on the board right now, and you can see here, explosive options, we're up 21% for the year. We haven't done anything for the past couple of weeks. S&P 500 is down about 4.3%. Having a pretty good week, up 1.7%, even after that huge drop on Monday. Still posting a strong gain for the week. Nasdaq up about 2.3%. Also had a really bad slip up on Monday, but did manage to regain a lot of ground on Tuesday and on Wednesday. Still down about 11% on the year. The S&P 500, of course, is down about 8.6% on the year. Dow Industrial's up still 1%, even though it had the worst showing of them all on Monday. Still had a nice strong day on Wednesday, up 1%, and the Russell 2000 is also up again this week, up almost 2% on the week. Small caps doing well because rates were down quite a bit yesterday. Still down 13.9% on the year. So we have a lot of ground needed to make up for the indices in order to get back into at least the flat line. But there's a lot of room left, a lot of time left to go. The only impediment here that we see is that the chart is bearish, right? Look, the S&P 500 still well below the 200-day moving average, and we had that death cross that happened about a week and a half ago on the S&P 500. What is the death cross? That is when the 50-day moving average, about 2.5 months worth of action, crosses underneath the 200-day moving average, and that is a technical bearish sign for the markets. And why is that technically a bearish sign? Well, look, big institutions look at the 50 and the 200-day moving average, 2.5 months worth of action, the 50-day, the 200-day, roughly about a year's worth of price action. And big institutions like hedge funds, mutual funds, pension funds, banks, charitable trusts, those sort of things, the people that move about 80% of the money that's in the markets tend to look at these technical signals, and very importantly, and they see when things are getting bearish and things are getting bullish. And of course, with this crossover, this death cross that we had here recently, that is bearish for the markets. Now, a lot of people would tell you, hey, look, that's probably just a sign that the markets are really oversold and it's time to do some buying. I get that. In most cases, that's true. But what we're more likely to get, and as if we're in a bear market, as I think we probably are, what we're more likely to get are bear market rallies. And look, I mean, I can tell you from experience, some of the best rallies I've ever seen and ever experienced have happened in a bear market, right? So, big, huge monster rallies, one like we had back on April 9th. What was the problem with that April 9th rally? We didn't get any follow through, right? Look at it on the chart over here. Look at the chart. I'm going to expand this out again for you. And you can see clearly on this chart, this big, huge bar where the S&P 500 was up about 500 and something points, but we didn't even get above the highs, right? We came right back down over here. We gapped up on Tuesday, gapped up yesterday, finished right at just below the 20-day moving average, right? We can't even get above the 20-day moving average, which is still declining, has been declining since the early part of February. So again, this tells me this is bear market action until further notice, right? That is always subject to change, right? We're not married to any particular view or opinion of the markets. All we're doing is interpreting what's happening now and what might happen down the road based on patterns and trends that we've identified in the past. So that's what we have right now. So could we turn around here? Absolutely. If we turn around and get above that high from April 9th, and we're talking about 54.81, let's call it 54.80. If we get above that level and get a couple of closes above there, well, that turns things around and makes it a little bit more bullish. Now, another problem that we have right now that I see perhaps going forward is the overbought nature of the markets. Now, what is overbought? I'm looking at the oscillators now. This is the New York Stock Exchange McClellan oscillator, traditional, and NYMOT. And what do we have here? We have this is an oscillator that tells you about breadth, right? It's not volume, it's not price action, it's breadth. It's number of issues up versus number of issues down. And when we move to the top of this box over here on the NYMOT, it simply means that the market is extremely overbought. And you should be looking to reduce positions, reduce your size, and reduce the amount of exposure you have to the markets. And then wait for a pullback, or if you want to be aggressive like I am sometimes, buy some puts and play for the downside. Now, where are we at right now? We're at plus 167. On the hotter end of the oscillator readings here. And actually yesterday at one point, this was up to about 190, 195, right? So pretty hot reading up here, because you can see back in 2025, January, and even before that in the fall of 2024, we hit those numbers, and the markets got slammed down right after hitting about 200 to 220 on the oscillators. Now, did it start a bear market back then? No, but in January, certainly we've had poor readings on the McClellan oscillator since we hit that peak in January, middle to late January. We've been making lower highs, lower lows. We made a lower high here, and we even dropped so far in early April down to the minus 260 level. That was a super oversold reading. Now, on the flip side of the overbought reading is the oversold reading. So when we get down into this minus 200 range, or even more than minus 200, you want to look to start doing some nibbling and doing some buying and putting some more capital to work, because you're more likely to get a rally off of that. Now, some of the rallies we've had recently, certainly for the past 3 weeks, pretty erratic, right? And that's due to the fact that the VIX is still elevated. The VIX is still up about at 28% right now. We see the let's take a look at the markets here for a moment. We see the S&P 500 futures are only down about 2.5 points. Now we're almost about flatline here. We were down sharply earlier this morning. Overnight, we were all the way down to about a minus 35, 40 handles at one point, but we've rallied all the way back. The Nasdaq was negative, and now it's positive again. It's up to 27, 28 points. The Dow Industrial is down a bit, probably due to the fact that IBM is down sharply, about 7%. That's hitting the Dow Industrial. It's down about 150 points. Some names that we saw that did good on earnings, did well on earnings, is ServiceNow. Of course, NOW is the symbol there. That did real well. We also saw earnings not so good from Chipotle last night, down about 80 cents over here. But they did say that traffic to the restaurants was down quite a bit, and also they think that there's going to be some negative effects from the tariffs, some of their products, and some of their maybe some of the supply chain issues that they have. So it's going to be difficult for them to address that. We did see some good, strong earnings from Texan last night. Texas Instruments is up about almost 10%. So that's pacing the semiconductor stocks up about 2% for the semiconductor holders. Real strong move for that index here. That's something you want to take a look at over here. It's up about 4 points right now above the $200 level. That's a key level you want to hold for the next couple of days. We're seeing good strength in Micron. Even NVIDIA is down, up a little bit over here, 104 or something like that. Netflix down a little bit. We see some good strength in Tesla early on. We had a great day yesterday following their earnings on Tuesday night. And don't forget, tonight we do have a whole slate of earnings coming out as well too. The top of the list here, the one that everybody's going to be watching, of course, is Google, Alphabet over here, which has certainly had its share of troubles lately with the regulatory issues. worry about antitrust. They were fined recently and had to pay a huge penalty. And who knows where some of these lawsuits are gonna go. They seem to be going in favor of the government, and maybe they're gonna put the screws to Google, Alphabet here over time, or perhaps Alphabet's just gonna get out their checkbook and write a big old check to the government and maybe make that problem go away like that. That often happens with some of these big companies when they make an 11th hour decision like that. So also we'll be hearing from Intel, Celestica, excuse my back here a minute, T-Mobile tonight, Vale tomorrow morning, AbbVie, Schlumberger, SLB, Phillips 66 will be reporting also, Staples name, Colgate Palmolive, and Centene and Charter Communications. We heard from Comcast this morning. They had some pretty decent numbers. Those stocks down a little bit this morning. So it's going to be an interesting day here. Of course, last couple of days, the markets have been stoked higher due to some, tariff news. Also, the fact that President Trump is not going to aggressively go after and fire Chair Powell from the Fed. That news came out Tuesday night after the close and really goosed the futures up and held up most of the day yesterday. But then there was some tariff news that came out later in the day on Wednesday that had the markets in a bit of a retreat, but well off their highs, but still was a strong market day yesterday. I think that a lot of uncertainty out there, a lot of uncertainty here, and again, we talked about the end of the month here the other day, and I think as we get closer to the end of the month, we have to pay attention to the monthly chart. And yes, it's a nice candle over here, but we are still in negative territory. Now that could certainly rehabilitate itself. We have 5 trading days left until the end of the month. It's April 30th is the last trading day of April. So we have today, tomorrow, Monday, Tuesday, and Wednesday of next week, and then we get started with May. And again, that could rehabilitate itself. We could end up with a white candle here if we end up higher than 50. Looks like 5,900, right? Or no, actually about the close 5611. We'd end up with a white candle. So we're at 5375. That would be about 200 points. Listen, that could be done in a couple of days. Last 3 days actually, we've had the S&P 500 moving more than 100 points, more than 100 points to the negative side on Monday, higher than that on Tuesday, and higher than that on Wednesday. So that's why we do have a positive day. Now, why all this volatility right now? Well, the VIX is elevated, right? VIX is still up at 27, 28%, right? That's telling you that the market expectations are for big, huge moves in the markets. Until that starts to decline and showing some trending to the downside, let's take a look at the VIX here just for a second. This is the monthly chart. Let's take a look at the daily chart here for a minute. And you can see that big moonshot that we had up towards 60 in the early part of the month is taking its time, burning itself off, right? And once we get back down over here into the low 20s, I mean, maybe today is going to be one of those days where we don't have a lot of movement. I talked about it in the chat room yesterday, and I put a video out talking about that same very thing happening, that there was a lot of premium built in these options into the end of the week, which is tomorrow, the last day, right? So there's a lot of premium. The implied volatility was extremely high. It was about 37%. Well, the VIX is at 28, right? So option premiums were super expensive. So if we get a calm day today and a calm day tomorrow, what are those option premiums going to do? They're going to collapse. So I suggested in the room to sell put spreads on the S&P 500 SPY, calls and puts. There was a very, very wide spread that I suggested, taking in about $6 a premium for every combination of contracts over there. So 5 of those, would be worth about $3,000. And if we closed, say, at 540 tomorrow, you're keeping everything, right? So of course that suggestion went out when the SPY was about 538 yesterday. We're down about 535, almost 536 right now. So we need a little bit of work to get back up towards 540, but it certainly could happen today or tomorrow. But my point here is this: is that if things calm down a little bit and we have less movement here, we're going to see the VIX fall even more. All right, because the VIX is just telling us that there's going to be some wild movement, wild action. Okay, so that's going to be it, everyone. I appreciate everyone spending a little bit of time. I hope you learned a little bit something today, and I enjoy sharing some knowledge with all of you. It's always a great day to learn. I would highly recommend you take some profits again today. We're still in a bear market. This is still bear market trading in a bear market environment until further notice. And so that being the case, you have to pull out the bear playbook. And that requirement is have some puts on, take some profits quickly when you have them. We had a lot of profits yesterday and some calls, and if you ask anyone around, especially in the chat room, we booked profits quickly. I rolled some stuff up, and I just took some stuff off the table. You have to be ready for that next moment. Is the moment going to be down? Is the moment going to be up? I don't know. You don't know, but you have to be ready for it when it comes. So trying to play the trend right now is a huge mistake. It's a huge mistake. There is no trend, right? You look at this chart here. Okay, I try to speak to you guys from a common sense point of view. I'm not talking in terms of hope. I saw some guy out there said, I'm going to be bullish this week. I'm going to be optimistic just because I feel that way. Well, feelings aren't being rewarded in this market. If you feel good about the markets, if you feel good about taking a position, there has to be a solid objective reason based on fact for you to take that position. Otherwise, you're just simply guessing. It's flipping a coin, heads or tails. I don't know which it is. I like to think that you and I are a lot better than just guessing what direction the markets are going to go. You got to have some evidence in your favor to make a choice or make a decision. And if you don't, that's okay. Just admit it and understand and say, look, you know what? I have no idea what direction we're going to go into. So I'm just going to pay attention to the tea leaves and watch the market direction. And when we get there, when we figure it out, we'll make a move. But as of right now, you look at this chart right here, and if you can figure out what direction we're going to go into, you're a much smarter person than I am. But I've been doing this for a long time, for many years, and it's up to you, it's up to me, and it's also up to you to recognize when the conditions are such where you have to back away. And this is one of those times right now. Does it mean that conditions are going to be like this forever? Of course not. I think conditions are going to be like this for maybe a little bit longer, but until we get some clarity, until we get some less uncertainty right now in the markets, you have to understand that this is the way you have to play it, and you have to be guarded. You have to hold a lot of cash. You have to have some puts. You have to have some a really tight trigger finger on trades if they're not working for you, and if they are working for you. Okay, so I hope that's helpful for you. I'll be back with you on Monday. Looking forward to spending a little bit more time with you, and we'll see what happens over the next couple of days. Again, we have earnings coming out tonight from Alphabet. Pay attention to that one. That could pace the market action tomorrow and into Monday. So have a wonderful day. I appreciate all you spending a little time with me. Share it with anybody if you can. Please send this out on social media when you see it. Good trading today and tomorrow. And if you're in the chat room, I will see you a little bit later on today. Take care, everyone. Bye. I just want someone to hold me.